We've written an article called The Best Trading Stocks in Australia, which you should have a read of. Anyone who hasn't noticed this phenomenon needs to read it. It is that there are some extraordinary correlations in the Australian market between commodity prices and share prices. So if you were to look at, the most obvious correlation is Fortescue Limited against the iron ore price. If you overlay the iron ore price on the Fortescue share price, or the other way round really, the Fortescue share price follows the iron ore price almost exactly. And when you look at correlations, you're looking at the turning points. You don't look at the magnitude of the gap between the two lines. It's a correlation is when it turns at the same time. And Fortescue Limited turns whenever the iron ore price turns. So if the iron ore price goes down, FMG goes down. It goes up, it goes up. And you can do the same thing with almost any resources stock. So with BHP, it is 30% copper, it's 46% iron ore and 20% coal. So that's revenue. You probably want to do it on a profit line. But you could write a little algorithm which predicted what the BHP price was going to do every morning, judging on what the coal price, the copper price and the iron ore price did overnight. But essentially speaking, Rio and BHP and Fortescue follow the iron ore price around. There's also a phenomenon that most commodity prices move together. One of the biggest drivers for commodity prices is the US dollar. They're all priced in US dollars. So when the US dollar goes down, commodity prices go up. When the US dollar goes up, commodity prices go down. So they all tend to move together. And you'll find there's an extraordinary correlation between commodity prices and resources stocks. And whether that's iron ore, which are the most obvious, BHP, Rio, Fortescue, or whether that is gold stocks and the gold price, or lithium stocks and the lithium price, copper stocks, the copper price, all of the commodity prices are driving share prices. The bit to learn about this is that you can do as much fundamental analysis as you like on BHP, Rio, Fortescue. You are wasting your time, because you can go off and find out what the return on equity of the Brazilian subsidiary of BHP is, but it's completely irrelevant, because the stock is going to be driven by what the iron ore price, the copper price, the coal price does tomorrow, and nobody knows what that is. And any domestic fund manager will tell you that there is a phenomenon in Australia where it is when BHP looks to be its cheapest, and it peaks, and it looks to be at its most expensive, and it bottoms. And it's because the past numbers are all completely irrelevant, because all the future numbers are driven by commodity prices. So forget doing fundamental analysis on big resources stocks. You have to guess what the commodity price is. And if you could do that, you could make a fortune. And to give you an idea of that, BHP, the biggest resources stock, the slowest moving, the least volatile. Let me just point something out to you. BHP, since the pandemic, has had 13 moves, share price moves, up, down, 13 trends, call it that have averaged 33%. Within that period, it has had 6 rallies that have averaged 44%. If you want to make accelerated gains in the stock market, this is a fantastic stock market to do it in, Australia, and resources stocks are the stocks to do it in. They're not investment stocks, they are proxies for commodity prices, and they give you accelerated and exaggerated returns depending on what those commodity prices do. So if you can get the iron ore price right, you can get BHP right, and you can make a fortune. And that's just the biggest stock with one commodity price. If you were to look at, say, lithium stocks, since the pandemic, Pilbara Minerals, a lithium stock, has been a 43 bagger. Point being, Australia is a fantastic stock market for traders. It's a fantastic stock market because it's got resources stocks, and you can make a fortune if you can get commodity prices right and don't worry about the fundamentals, because PEs and yields are not going to help you.